U.S. Treasury bonds have collapsed. Currently, there is an epic sell-off of U.S. bonds. A large amount of capital is being sold off. U.S. bonds are flowing into gold and commodities. Once the U.S. bonds collapse, the dominance of the dollar is questionable. Whether the United States can still exist is a big question mark. Some may remember the UK bond crisis after the budget crisis in September 2022. This US bond situation is similar. Bond prices have been continuously declining since April 2nd when new tariff policies were announced. Even amidst a stock market crash, they have not played their traditional safe haven role. For example, on April 10th, futures prices dropped by 3 points from the previous week. During the same period, the S&P 500 index only fell by 2.4%. The dollar index has also rapidly declined, leading to a simultaneous drop in stocks, currencies, and bonds. Moreover, this year marks a peak period for U.S. bond maturities, with nearly $9.2 trillion maturing. In June alone, there will be $6 trillion. Last year, only about $1 trillion matured. These maturing debts need new buyers and interest recalculations. There is a significant gap to fill. A savvy leader is needed to address it. With fewer buyers for U.S. bonds, the leader hopes to leverage tariffs to stimulate U.S. bond purchases. The aim is to attract countries to buy long-term low-interest U.S. bonds in exchange for tariff reductions. The leader has recently paused tariff increases due to a sudden spike in bond yields. If the issue isn't resolved by June, the U.S. could face significant financial losses. At the same time, the East is choosing to confront the U.S. directly. This is to avoid giving the U.S. an upper hand. If it can just hold out until June, the U.S. will be out of options before compromising with the East or allowing U.S. bonds to collapse. The leader is likely to choose negotiation. This period marks the negotiation time for bond maturities. The U.S. financing market is tense but not collapsed. Concerns over poor trading in government bonds have intensified. However, the real dilemma will stem from rising financing costs.